Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, guys. Welcome back to another live stream. We're back in the office and prepping for another day. Today we've got unemployment claims, which should be an interesting figure. Probably not a massive market mover, however, still worth watching to see what we get. Now, we have kind of two pieces of information that will be interesting to the market. Well, three if you consider building permits, but unemployment claims are forecasted to come out here this morning at 206,000 unemployment claims. Think about what that's saying. So for those of you guys who are aspiring fundamental traders, this is an important figure. Unemployment claims, this is basically how strong or weak is the jobs market. Now, we get this data every week, so it's a nice pulse check on the sort of fundamental side of the labor market. If you take a look at unemployment claims in recent times, we can actually do this. We'll go really quick. Unemployment claims have been relatively low, which has shown, again, a consistently pretty strong labor market. If we go back to, of course, back in like 2020, remember, unemployment claims went crazy as basically a lot of people got laid off due to the, really tough times. I mean, look at that. There was the true terrifying, moments when we saw kind of everybody get, we did lockdowns and everybody. So again, very different story as we see today. Unemployment claims are much, much lower and the jobs market is still overall really strong, all things considered. So the question is today, what are we going to get? And is it going to move the markets much? What do you want to see here today if you are a dollar bull or a dollar bear? Well, if you're a dollar bull, you want this number to be low. You want very few people going for unemployment claims. You want a strong labor market, because a strong labor market is going to push back on the rate cut idea. Again, if you are a dollar bull, let me be very clear. You want economic data out of the US to be super hot right now. So if you're somebody out there and you're a dollar bull, what you want to see out of unemployment claims, out of PMI numbers, out of inflationary reads, you want to see hot, hot, hot numbers. That's going to keep you in the game for dollar bullish breakouts. Weakening economic data, that could come in the form of retail sales. It could come in the form of GDP numbers. It could come in the form of PMIs. Weakening numbers would suggest that the economy is cooling. Now, I'll give you, it's a confusing landscape right now, guys. And I'll be the first one to say it. This year is not an easy one in the markets, because here's the thing. We're all talking about rate cuts, but my concern is that the US economy does not seem to want to chill. It's really, really strong. Now, I know that sometimes comes across as gaslighting to people who are like, barely making it out there, and the grocery store is giving them, heart palpitations because of how expensive everything. I get it. I'm not necessarily saying that everyone is just flourishing. I'm just saying that overall, some of the key metrics that we use to detect economic strength are there. One of the biggest ones being the labor market. People are employed. People being employed, people having money coming in, generally over a large sample size says the economy is doing better than usual. And, it was super red hot last year. And this year, for those rate cuts to come in and offset some of those prices that are going crazy, we need to see economic cooling data. My issue is that we're not seeing that. And so that's why I am still a dollar bear. But the problem with that, with being a dollar bear right now, is that I have to face what I'm seeing, some economic data that's coming out strong. And not to mention my very own software that detects economic data. Guess what it's starting to say? Kiwi dollar, very bearish, favoring the US dollar. Bearish on the Australian dollar. Bearish on gold. Bearish on gold, guys. Does it break my heart? A little bit. Does it break my heart to say this? A little bit. But it might be time. It might be time to acknowledge what we see going on. We see strong economic data persisting. We see a stock market that got really excited really fast. And am I saying that it's time to potentially look for bigger pushes to the upside on the dollar? I don't know. I need to be really careful about this because, I don't change my bias that frequently. I was long biased on the dollar for some of this period, not all of it. I was short biased when we broke this level. And I rode this dollar bearish trend very, very well. Not to pat myself on the back too much, but you guys saw that S&P 500 trade. That was mostly a dollar bearish play. Okay, so if you guys saw my S&P trade, for those of you guys who watched, I bought November 1st. I closed, when did I close? I can show you the candle. I closed on this candle, December 20th. I was long for pretty much all of this rally, which was brought on large in part from the dollar. If you saw my S&P trade, let me be very clear, that was basically a dollar bearish trade. So I caught the move. But now I'm seeing economic data come in. I'm seeing people get so optimistic about rate cuts. I'm being careful, but I'm so neutral right now with the dollar, and the edge finder is telling me, look, economic data is strong for the US. So if I trade it right now, I'm not sure. Yeah, it's tough, guys. I'm conflicted. I'm not getting very many dollar bearish setups here. I'm getting mostly dollar bullish setups on the edge finder. What does that mean? What does the edge finder pointing at dollar bullish signals mean? It means that some of the economic data that's coming out, it means that some of the sentiment readings that we're getting are pointing towards being a dollar bull. Daniel, what's up? Daniel, you'll probably love this. I'm talking about facing the edge finder's bias. Dan Emerson, he's an edge finder enthusiast as well. I appreciate his commentary. We chat back and forth just about features that we're working on. And Dan, you might love this, but I am teetering on my dollar bearish ideas. I'm not fully convinced. I'm not fully convinced, but I am very much reconsidering how bearish I am on the dollar at this point. Again, I'm neutral, but excuse me, guys, I'm still getting over my sickness. I'm neutral, but my concern is that we still see strong economic data out of the US. We saw sentiment start to become a bit extreme to the bullish side when it comes to the indices. And again, I want to be clear. I keep coming back to this. My S&P trade that happened during the months of November and December was in essence a dollar bearish trade. So I rode the dollar down. My thought process on that was, okay, rate cuts being signaled by the Fed. I want that initial ride. But my concern now is that we see the edge finder pointing towards economic data strong. We keep seeing it. Yesterday, we had retail sales numbers that were strong. We're about to get unemployment claims, which will be interesting. Inflation was hotter than expected. NFP was the jobs market staying strong overall. You put all these things together, and you have the Fed signaling possibly 3 rate cuts. I think that there is more squeezed to the upside on the dollar at the very least. If I'm not necessarily a full-blown dollar bull, I think at the very least it's reasonable for me to acknowledge that there is a bull case that is coming alive for the dollar, and we'll watch very close. So again, couple things. I would say, even if I am a very cautious dollar bull, watch levels like 102.5. And Dan pointed out in the chat here, I just saw, looking above 104 on the DXY. Right? Totally agree. But again, was the dollar bearish setup there? Absolutely. I mean, like I said, obviously hindsight 2020, but I rode that thing real well. But I have been wrong about this pullback on the dollar, and now I'm reevaluating the data. But everyone is so hyped up on rate cuts that it's making me a little bit nervous now that we're starting to see everybody on that side of the fence, and we're seeing some strong economic data. Now, let me add something too, guys. I don't like to short indices. If you've watched me for a long time, you have probably tuned into my channel periodically, and it's usually one of two things. I am either at any given time, for the most part, I'm either bullish the dollar or bullish the S&P. I don't like to short indices. I very, very rarely will short indices. Why? Because why would I short something that goes up overall very strongly when I could instead just buy the dollar or perhaps short bonds if I really wanted to, etc. Guys, we got news. Let me not miss it here today. I point this out. I have had a track record of sometimes missing out on the news or at least the reaction. So let me go ahead and set up my candles. But I am, again, today is an interesting day. Are we going to see, are you guys going to see me capitulate today on my dollar idea? We'll see. I'm going to put the dollar index top right for us. Dollar index pushing higher into this number. So is the S&P. Interesting. Gold bottom left. And we'll put the euro bottom right. All right, breaking news coming in. Let's see what we get out of unemployment claims here this morning. All right, and claims just came out. S&P ticked a little bit lower. Gold, same thing, lower. I'm looking at the charts very differently right now, guys, after our previous conversation. Dollar index spiking, S&P. Let's see what we get on the numbers side. Unemployment claims at 187K, beats expectations. And that's another tick to the bulls right now. Okay, so again, we saw 187,000 unemployment claims compared to 206, which were expected. That is a beat in terms of labor stats. S&P 500. I'm not exactly sure what happened with the S&P overnight. We did see a strong push off of this area. Dollar index on this news, seeing a little bit of continued push. There's your 15-minute chart. I'm curious about gold because I mentioned it. Gold came right up to this resistance level, touched it momentarily and sold back off. The euro. Pound also. Dollar yen. Dollar yen is just a machine right now. Dollar CAD, dollar Swiss, Australian dollar. Should be interesting. Housing starts also strong, Dan points out. Yep. Definitely interesting. I want to see when it comes to positioning right now, gold is still kind of mixed. I would actually like to see gold. If gold sells off, I'm gonna say likely this number goes higher. Generally speaking, retail traders, they typically fade moves or attempt to fade moves. What we're seeing right now, and part of the reason why I do kind of like the Australian dollar and the Kiwi dollar, is that we see retail traders super bullish on these things. Well, I shouldn't say super, but pretty bullish, right? As a sum, as a total, kind of interesting. We changed, by the way, for those of you guys who are Edgefinder users, we changed our default when you pull up this page. It's a small tweak, but if you use this stuff every day, obviously like I do, if you use it every day, it's the small tweaks that go a long way. We changed the default selections to everything except for minor currencies and crypto. Of course, if you have the Edgefinder and you do look at these things, feel free to add them. I just feel like it's too much to look at one single look. And these are generally speaking where we see most of our users spending their time checking retail sentiment. So I changed the default. So we get a look at gold. We can see the indices. We can see, contrarian signals across the board. Latest updates to the Edgefinder are phenomenal. Thank you, Dan. Yeah, we've been really trying to just improve stuff. I don't know if you guys have seen the put call ratio as well. This is a really cool sentiment indicator. A higher reading indicates that puts are more popular. There's a huge demand for puts, and a lower reading indicates that there's a huge demand for calls. Now, I will say, just because there is slightly more demand for puts or calls doesn't usually give you much of a signal, at least from what I could see on the charts. It was more so when you get extreme reads, that's kind of the more contrarian signal. So I was playing around with the meter on the left here to try and see like where do I want to kind of indicate best guess wise where an extreme reading would be. Anyways, use this if you have the Edgefinder. It's a very cool indicator. Put call ratio, you can check it out. It's just over here. If you do have the Edgefinder, just click the put call ratio tab. It's under retail positioning and AAII and investor sentiment, which I believe we get. What is today? Today's Thursday, right? It's been a short week here in the US, and I've also been sick, so I'm losing my days. We get the AAII investor sentiment survey, or did we already get it? We already got it. Look at this. Ooh, interesting. So this tab is really cool too. This basically asks stock market participants, in the next 6 months, how are you feeling? And what we see is that we peaked out in bullishness mid-December, right around, by the way, when I exited my trade. That wasn't even intentional. I just got trailed out. But it just so happens that on the week that I closed out of my trade, it was peak bullish sentiment that we've had in several months. Again, the blue line represents how bullish investors are on average. The red is the bearish percentage. So what we can see is that bearishness is slightly creeping in, but we still have a majority bull. And I think that over time, you're going to generally see a majority bull in stock indices, right? As they go up over time. But in the short term, they can be all over the place. So the higher the ratio, the more bearish. So Tim, and for anybody who is wondering about the put call ratio, here's the way I kind of read it. There's many ways. There's arguments to be made for either way. If this reading is mildly pointing towards puts, I would actually say that that's kind of a bearish signal, right? Because it's like, okay, there's clearly some factors here that are causing some doubt, and perhaps the market's looking a little weak. What I would say as a contrarian signal is extreme readings. So if you get everybody on one side of the bench, that's where I'm like, maybe that's a point to take profits, to consider trailing stops, or to even get negative or contrarian to the market. Something to think about. But the put call ratio, if you do have the Edge Finder, check it out. It's a really cool tool. I've been playing around with it myself. By the way, guys, we do have, I should have mentioned this earlier, we're doing a giveaway on the Edge Finder. If you do not have a copy of the Edge Finder, some cool stuff for you. Click this link. We'll drop it here in the chat for you. If you would like to join our giveaway, if you have not already, if you enter more than once, it won't help you, just so you know. It checks. So if you would like to enter our giveaway, here's the link. Boom, there it is. Click this giveaway link to join. We're giving away a copy of the Edge Finder at the end of the month. Totally free to join. No pay to wins, nothing like that. But if you would like to join the giveaway, fill out this form. It'll ask you for your email, and we'll send the winner a copy of the Edge Finder 100% for free. I don't know if we're going to be doing these on the regular, but we're trying it out. And full transparency, the point of doing a giveaway is so that we can get you looking at our tools. We work really, really hard on these things every single day. There's 10 of us at A1, and we do our best to make what we believe is a game-changing software for people who are trying to get more into fundamentals in their trading. We have wonderful other traders like Dan, who is in the audience, and a couple others that are kind of on the same boat, trying to deliver real trading, sort of ideas and analysis. And in order to do that, we're trying to build a tool that helps everyday traders get the same kind of data that hedge funds and macro funds that are, out there winning in the markets, what they're using. We're trying to build that level of data for the traders at home. So again, enter the giveaway. It's 100% free to join. Enter your email, and full transparency, you'll be added to our newsletter where you can see updates, ideas, and free analysis from the Edge Finder as well. Okay. Let's keep moving. We got a lot of markets to look at. I've talked about the Edge Finder and some ideas, but let's get back to the charts here for a moment. I talked about gold. Gold on the 4-hour chart absolutely went for a slide yesterday. We broke through support. We retested that support, and we're struggling at these levels. Should be interesting to continue to watch gold. The Edge Finder is actually giving it a bearish reading, which is hard to ignore, if I'm being honest. Take a look at so here's your read, guys. And what's interesting is the Edge Finder recently has been really only giving bullish ideas, right? But then recently you've been getting some pretty bearish ideas. So something to work through here is we're getting a lot of dollar bullish readings. And perhaps it is time for the dollar to take a bit more of a turn. Again, bearish reading a -6 on gold. Kiwi dollar and the Australian dollar getting -8s on the Edge Finder. So what that means is it looks across all the data that we have, which is we have a in-house built algorithm that considers these data points and gives us a general feel for how the data is looking. Is the giveaway country based? No, it's just everyone can join. One person will get it. Again, free to join. We dropped a link earlier. We'll drop it one more time if you missed the link. For anybody who would like to enter the giveaway, again, 100% free to join. GDXD, is that a gold miner? GDXD. It is a gold miner, triple leveraged. The Edge Finder is not really, there's many ETFs that perhaps one day we'll look more into, but the Edge Finder is sort of built mostly for FX and futures. It's not really built for stocks or ETFs at this point. Perhaps in the future, it'll be a little different. Look at that, silver breaking the lows. Silver looks even weaker than gold right now. Indices popped this morning. The NASDAQ had a huge run. but looking really interesting. I did a presentation this past weekend with Eightcap, and it was a remarkable event. If you guys missed it, you missed out. And I'm sure that they'll do more of them in the future. But I had the absolute honor of being it was basically setups for 2024. And I talked about indices. And let me just say that that was one of my happiest moments in my trading career. A lot of times people, they ask me to do FX related stuff. And I love FX, and I've traded FX for years, but I am more of an index trader than anything else. It's what I know the best. It's what I love the best. I like watching US data. I like listening to the Fed. Something about Jerome Powell. He's just got a soothing voice. No, I'm just kidding. But you know what I'm saying? It's where I'm most comfortable as a fundamental analyst, I would say. My point was saying that I did a presentation about indices, and I gave my outlook for 2024 as I am very cautiously bullish. Now, when I say that, I'm not necessarily saying I think the market's going to rip through highs and go massively up this year. What I'm saying by cautiously bullish is I don't necessarily think a massive correction is coming on the S&P 500. If something changes, I change too. I believe very heavily that in trading, it's okay to just adapt as markets go along. And that's why I'm not the biggest fan of big forecasts and predictions. However, when I say cautiously bullish, right now, everyone's kind of getting bullish. So I'm a little bit on the sentiment side, a little bit creeped out by that. But also, earnings, there's a lot of expectations for earnings. And I just don't think you have everybody on the bearish side like we had going into 2023 year when that was the case and everybody was super bearish. And then we had surprise data. There was a huge upswing move in the NASDAQ and, the Mag 7, et cetera. Mag 7, of course, referring to Amazon, Google, Netflix, or not Netflix, but NVIDIA, things like that, right? So, yeah. What's up with the voice? Are you losing a lot lately? I am sick. Almost done with it. I sound a lot better than I did a few days back. Gonna run, Nick. Thank you, Dan, for stopping in. Thank you for being here, man. Appreciate you. Have a good night. Do you believe there'll be 6 rate cuts or 3? So again, this is part of the reason why I don't necessarily, I'm not an economist. As much as I look at this data so much and I react to it, I'm a trader. I react to it. I look at the consensus. I look at kind of where we're at. And I look a lot at sentiment, right? I think that sentiment, oftentimes economists will purely look at economic data, but kind of leave out the sentiment part. I look at the COT reports. I look at retail positioning. I look at outlook as a trader, right? So here's something to think about. I totally lost my train of thought. That was weird. Anyway, sorry. Okay, so rate cuts. That's what we're talking about. Rate cuts, 6 or 3 or 5 or 4 or whatever. I don't necessarily predict how many are going to happen. The Fed has some geniuses trying to forecast, or the market does, right? The market has a lot of smart people trying to forecast. If you take a look at the 2-year, it looks like we've seen a little bit of decreases in the expectations for rate cuts off of the recent move in the 2-year yield. Now, my point with saying that is that I look at sentiment very heavily. The whole market thinks we're getting a lot of rate cuts, right? If you look at the stock market is signaling we're going to get so many rate cuts this year. It's going to be wonderful. But the stock market gets it wrong sometimes. A recent reminder of that event was when we saw everybody getting super dovish, thinking the rate cuts were coming back in summer of 2023. Well, it was really early, and we saw from there a 12% roughly pullback in the NASDAQ, right? That would have been painful if you just decided to get long over here and then the market corrected. So the market gets it wrong sometimes. The stock market gets overly optimistic and overly pessimistic at times. So I do think that right now you have a little bit of that dynamic. Anyways, guys, we do have Marco joining us. We're going to be taking a look at some technical setups here in just a moment. Before he comes on, let me just remind you that if you have not joined our giveaway for the Edge Finder for the month of January, we are running that right now. We'll just drop that link here one more time in the chat for those of you guys who would like some more information about that giveaway. It is free to join. Click this link, fill out the form, and you enter for a chance to win a free copy of our software that we work on every day here at A1. All right, we're going to take a quick break, and then we're going to join with Marco and maybe Miko, but I'm not sure. So we'll be right back with Marco for some technical setups with him in just a moment.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right. Hey, Marco, what's going on, man?
Hello.
Good to have you back on the show. No Miko yet. I don't know if he's coming or not. I assume that he is. I haven't heard anything otherwise, but he just joined. So we can bring him in whenever he's ready. We can pick up some charts. And I'm glad you guys are both here because I was just having a conversation about the dollar. And there's been a lot of economic data that's come out pretty strong recently for the dollar. So I'm curious of any dollar crosses that you look at. I know you look at EU, you look at a couple other ones. What do you think about the dollar here today, Marco? And hey, Miko, we'll send the same question to you in just a moment.
Okay, sure.
Sure. So let me go over some of my dollar pairs. So starting with EU, for me, EU is a bit indecisive on this 1 hour chart in this general area. It's looking a bit flat. It's kind of showing a bit of volatility as well with the same sort of momentum going up and then going down. So what I would expect is currently nothing. But if this V reversal plays out, I know it can sometimes create a range and then a push down and then a nice downtrend. But currently on EU, I'm not seeing much. Then we have AU. AU seems to be slowing down a little bit as well. What I do know is that these formations, when you get like a descending channel and then you get this final impulse to the upside or downside, it's kind of the exhaustion of the move, and it's usually a key reversal area. So I would not be surprised if this does reverse to the upside, but currently I'm not seeing that bullish momentum. So I'm still waiting for a breakout to the upside from this general area. Then we have GU. For GU is very flat for me personally as well. I'm not seeing much potential either. So the dollar pairs are a bit asleep, but the Japanese pairs are definitely showing me a better story. So EJ has been trending up. It's pausing now a little bit, but it'll possibly continue up. So EJ is on the radar. Then we have the Aussie Japanese yen. This one is corrective, I have to say. It's kind of flat overall. So I'm being more patient on this one. And we have the New Zealand Japanese yen. That's the final one, which is corrective and range bound as well. Large wicks all over the place. Usually when I see on this 1 hour chart all of these huge wicks and smaller bodies of the candles, it usually signals very range bound, very corrective price actions. So I want to see price cleanup. I want to see a large push up, a large push down. I want to see a nice uptrend or downtrend. So today EJ is the only one that is really on my watch list. Again, we had I would say a really nice push here. No entries for me personally, but the push may continue to the upside.
Okay, interesting. Yeah, thanks for running through all those pairs with us. That was awesome. And yeah, sure. The yen pairs seem to be really moving. I guess, Miko, I want to ask you the same question. The dollar index, really strong all of a sudden. It broke out of consolidation, it seems like. And I'm curious, because I was mentioning this to Marco just before you guys joined. I've been kind of wavering on my dollar bearish idea, and I've actually been kind of considering the upside moves to the dollar. And I probably wouldn't chase it here, but I'm watching it close. What do you think about the dollar? Do you kind of stick to your bearish outlook that we had in the months recently, or are you kind of in the same camp? Are you looking at the dollar a little differently?
Yeah, so I am I am looking for opportunities to take advantage of dollar strength. I do think, looking at the DXY, that we've had a really nice breakout of the consolidation this week, and I've been looking for a pullback to retest the top of the range, similar to what you had in your chart there as well. And I'm looking for more upside of that matter, because overall for dollar, it has been a very kind of back and forth year. We've been up and down, up and down. You can see 2022 was a clear uptrend. 2023 has just been, there's been some trends in there, but overall we haven't really gone anywhere. So I'm kind of just looking at buying low, selling high to an extent. So closer as we approach some areas up here, I would start looking to switch that bias back to short again. But after the breakout we had this week, I'm looking for some pullbacks and continuations. And yeah, it does look like dollar may just want to continue without a bigger pullback. And again, that is as a possibility. I'm looking at Euro USD heading down as well, and Pound USD. Pound USD looks good, but I do want it to break out the consolidation here, and then I'll be seeing if I can get involved in the break and retest. So yeah, after the breakout we've had this week, I have to say I'm favoring more upside for the dollar. I don't expect anything too crazy because conditions have been choppy, but I think we can push a lot higher going to next week.
Yeah, and Miko, before we toss it back to Marco, while you have the chart here, what do you think about gold? I mean, obviously the strength in the dollar put some pressure there on the metals. We saw gold really sell off yesterday. And Marco, I know you don't trade it, but we'll come to you with that next.
Sure.
So yeah, for gold's been interesting. I've been not really looking to trade gold, but I've been eyeing up this big level of resistance because these are the all-time high resistance, so to speak. Price keeps coming back into this level and keeps rejecting it very, very well. And we've seen that as of late. So I'll be looking to see if we can start to form a bit of a bearish trend, which looks like we're seeing the start of that. We've been printing in some lower highs here, 1, 2. I'm looking for potentially a third one, potential price to come back into these areas. I'm still longer term bullish on gold, but I do want to see price pull away from that big level, simply because it's not really a great place for me to pick up long. So I'm more interested in some counter trend moves, which kind of does buy into the idea of more dollar strength as well. So I'm kind of looking at something like this for gold. I do want to see price kind of break a little bit further to the downside before I start eyeing up a retest. But I would say I'm more of a bear here for gold, looking for a push back into these lows eventually.
Okay, fair enough. And Marco, what do you think?
Yeah, I'm the same as Miko. So on this 1 hour chart, I'm seeing some major bearish pressure. So some very strong bearish legs here, and here below. So by gauging just the momentum, I can definitely see a short-term downtrend. When I switch up to the, let's say, 4 hour, let's do that. It is a bit corrective, so a bit flat. I'm looking at how we're breaking the major lows, and each time we break a major low, a correction happens. So we don't get that strong push like we got, for example, here. So break of the high, strong momentum. Break of the high, strong momentum. That's what I want to see in a trend. And this, on this 4 hours, looking more like it's moving in this, well, I would say a channel. But on the 1 hour, short-term downtrend for sure. So that would be my kind of bias. Short-term sell, and larger picture is a bit indecisive.
Okay, fair enough. Yeah, no, I think it's an interesting outlook with the dollar all of a sudden strengthening. And I make this point often on my channel, and I imagine it's integral to you guys' stuff as well. But a change in the narrative on the dollar, like suddenly a stronger dollar, just completely changes like everything across the board. Even some of the yen crosses, even some of the the non-USD related stuff. a huge shift in dollar sentiment is usually tailored with, concern about outlook. We're starting to see a little bit of risk off sentiment. And I want to ask, what do you think about the indices as well? Because despite a little bit of tick up in the dollar, yes, we have seen indices slightly pull back, but for the most part, they're still holding their highs. Do you think they have room to fall back down further? Do you think they could break out? What do you think about S&P, Dow, NASDAQ, whatever you think you'd like to look at?
So yeah, I've been touching on S&P for a while because US 30 and US 100, both of them created new all-time highs, but S&P still hasn't done that. So I still think there is room for price to do that. However, as you mentioned, we're showing some signs that the market's starting to tire. I mean, looking at the daily charts, not looking too magnificent at the moment. Of course, we're failing at the highs there. I think US 100 kind of failing at the highs there too. US 30 kind of consolidating a little bit as well. So it does look like the indices are starting to pause. And again, if you look at the overall momentum in the market, it's still relatively bullish. So I wouldn't start shorting right away, but I would wait for price to start developing a trend here to the downside, and then that could be interesting because we're all at big highs here. A couple of them are all-time highs. S&P is approaching it. So if the market is going to reverse, then I do want to see a trend start to print, and then at that point I'll be anticipating more downside on the pullbacks, and that could be some nice opportunities. And I see the exact same opportunity for all of them. If US 30 starts breaking out the consolidation, we start seeing some trends following, then again that looks like a nice place to short because we're up at big levels. So if the market is going to retrace, there is some room to the downside there. So that's kind of where I'm at with the indices.
Yeah, I think it's worth mentioning, the indices had such a strong rally, mostly because for the same reason that the dollar index had such a strong sell-off. The idea of rate cuts coming got the market really excited. And now with all of this, it sounds a little confusing, but the stronger economic data is now suggesting to the Fed, maybe we don't need to rate cut so soon. We are kind of hanging in there. Why rate cut if we don't have to just yet? The economy is still showing signs of, strength, and inflation could still be a problem. So that is where I think if the dollar stays strong, that's the story. That's the fundamental side, I guess. And that strength in the dollar could turn into weakness in the indices as well. So I think it's at least worth watching, the dollar index in retrospect to how it could impact the indices as well. Marco, what do you think? Same question. Any of the indices, whether it be S&P, NAS, Dow, whatever you'd like to look at.
Yep, sure. So let me see this one. Well, on this 1 hour, it's looking very descending. So usually when I see this sort of a descending channel, I do expect more upside to happen, and it's starting to print this move to the upside as well. So my short-term bias would be for this to go up, and I think a similar thing happened before. So this is exactly what I look for the Forex pairs. I'll look for these descending channels, and then I look for confirmation of bullish pressure, and usually it starts a nice uptrend as it did here. So yeah, I would not be surprised if same thing that happened in this general area happens right here, and it's all about how the lows are being broken correctively. So these lows only being broken with wicks, not showing major selling pressure, but instead kind of preparing for a trend in the opposite direction. So that is my analysis for the S&P 500 on this 1 hour. I can do 4 hours as well. So on that 4 hour, it's looking, flat. It's looking like it's ranging around. So on the 4 hour, I would not touch it. But again, it could reach, on the 1 hour, it could reach these upper levels of the range, which could be a trade for someone, let's say.
Sure. Very cool. And also, Marco, I got to say, I imagine someone else in the audience might be wondering the same thing, but that is a really cool indicator that you've got on there that shows like the high points and low points of, I imagine it's like an in-bar look back period where it looks back a certain period, takes the high, takes the low, and marks it up for you. What is that indicator? Did you make that, or did you find that?
No. So it's basically called this one. So GT recent high and low by Bong Hyun. And so we were in the same trading community. He created this indicator specifically for the strategy that was traded in that trading community. So basically we all use it now. It's free and it's very good for the highs and the lows. Again, you have the most recent high, the most recent low, and you have the breaks marked out as well. So if you're looking at a descending channel, you can see that only the lows are being broken right here, these dotted lines. So it makes it much, much easier to spot nice, clean descending channels, makes it a bit easier on the eyes. So yeah, thank you for spotting it.
I love the way that you point out the way that price is taking out the lows. Is it taking out with strength and follow through, or is it like timidly trying to go beyond the lows or the highs and then coming right back in? I feel like that's a very cool price action signal. You know, and just by price action kind of 101, you do sort of study that stuff, but this makes it visually pretty easy to see, you know, the strength behind breakouts. It's a really cool indicator.
Yeah, thank you. It is. Well, basically, it's kind of all about accumulating positions, right? So the bigger players push it down a bit more, accumulate a bit more buys, push it down a bit more, accumulate a bit more buys. So in each of these legs, if you don't see any major selling pressure, that means probably that buying pressure is being accumulated. And then it finally happens that they decide to flip it to the upside and create a very strong trend. And you can definitely see a major difference in these legs, in these bullish legs, than the momentum that you see in the bearish legs. So
very cool. Well, thank you for showing us that. And thank you guys both for giving your insights on some of the different currency crosses, the indices, and gold for us here today. Appreciate you guys coming on. And I do also want to say, for those of you guys who have not already followed Miko and Marco on their own YouTube channels, you can keep up to date with them. They put out some wonderful content that definitely highly recommend that you put this on your YouTube subscriptions list. Both of their links are dropped in the chat right now. You can find Miko or Marco on their respective YouTube channels. And again, as a thank you from the show, we do encourage the audience to go show them some support for coming on to the show. Guys, thank you very much for coming in, and we'll see you next week.
Thank you very much. See you next week.
See you guys.
Bye.
All right. Very cool. Yep. Thanks to Miko and Marco, as always, for coming on the show, for helping out. You know, you gotta think for a second. These guys don't have to come on the show. We don't pay them to come on the show. They have their own followings, of course, and we try to pay them by, you know, giving them some love from the community. We're trying to bring real traders on here. And, you know, I think they do a great job each week coming in, breaking down the charts. Sometimes we have differing views. Sometimes we have similar views. But I find it very valuable just to get some more other people's thoughts, especially very technical traders like Miko and Marco. I lean more towards the fundamentals, but with a technical, you know, piece in there, and they're very, very heavily on the technicals. I do want to say, guys, we mentioned this earlier. If you guys would like to get access to the Edge Finder, we are doing a giveaway this month. We dropped the link earlier. We'll drop it one more time here for you. In your YouTube chat, there will be a link that will allow you to sign up for the giveaway. And one person is getting the Edge Finder totally 100% for free. And it's 100% free to join. So if you're not already in there, make sure to join the giveaway right here. And there you go. All right. So let's see. Anything else we want to talk about? I will probably be, after this video, going through what I spoke about earlier about the dollar and trying to make up my mind as to whether or not it's time to get bullish. I'll give you my thoughts in today's video. Just a heads up, I'll probably also be making some Telegram posts about my thought process on the dollar. If you'd like to get early insights into what my video is saying, the fastest way to know is make sure you are in our Telegram channel. We're going to drop the link here in the Telegram. And again, we got free resources here coming everywhere today. So join our Telegram. This is where we update. We send charts, graphs, ideas, analysis, updates, all sorts of stuff. Join the Telegram, totally free to do as well. With that said, guys, thank you very much for tuning into today's video. And with that said, we will see you back tomorrow. See you guys.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles, keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way, so you need to move along. Frankie, that hard hat needs to be on your head.